It's frustrating to see all these stocks just open high and just crap out. And you're like, I want to take advantage of those. Well, now you can. Now, first off, I want you to understand this video is part of a 3-part video series where I'm helping beginners build a foundation, learn a long bias strategy, and now a short bias strategy. So if you're new here, welcome to the channel. Hit that like button because it really helps us grow the show. And keep in mind, for complete beginner, you need to go watch the beginning part of this series and continue forward. But if you're here already, let's get started. Let me show you a great gap and crap strategy that I use to help me first get consistent. I know it's frustrating to see all these stocks rise up in the morning and just crap out all day and can't take advantage of it. Don't worry though. I'm gonna give you 3 steps so you can. So these 3 steps are very simple and to understand, but you need them to be there. If they're not there, don't trade. Understand, when I traded this way, there were sometimes weeks that I only placed 1 trade in 3 weeks. There's sometimes months where I place 5 trades for the month. Sometimes I place 5 trades for the week. You just need to understand, you got to be selective and you have to be able to take a loss. Because if you do not, you will lose all the time and you will blow up your account. First step, you need a stock to be gapping up 50% or more. It has to be 50% or more. It can't be 49, 45, 40, 30, 50% or more. It has to be that. You need to know this. I tried doing 45. I tried, you know what? It's 49. Let me give it a shot. Wrong. Don't do it. The odds start decreasing. You need 50% or more. And in fact, if you get 75% or more, then the odds are really in your favor and I'm feeling good. The second thing you need to see is you need it to top out during pre-market, meaning it needs to top out pre-market and then fade through the day or hold a little bit. And it can't be strong. It needs to top out and fail. If that happens, then you're feeling good. The third, and probably the most important, because if you do not wait for the third, then you will always take losses on this strategy, even when it works. That is, you need to wait for the stock to rocket back to the pre-market highs. That is what you need to wait for. If you don't wait for it and it does it, you're gonna be in for a hell of a ride. So you need to make sure you wait. And this means there's gonna be a lot you see, oh, it's set up, it gapped up 50% or more. Oh, it topped out. And then at the open, it just tanks. Oh well, you're gonna miss them. Don't chase. Let me share with you what I'm thinking of when I see this criteria hit, and then I'm gonna show you. Now, what I'm looking at is when I see a stock gap up 50% or more, I want to look at the daily chart and I want to make sure that it has failed before in the past. The next thing that I'm recognizing is when it fails on the pre-market, I'm like, okay, there's already a sign of weakness. There's a lot of people who are selling up there. There's a lot of selling pressure in that area. And so when I'm waiting for it to squeeze up to go to that same area, I am waiting and I'm going to short it in that area. Now, when I do this, I'm going to give it some room to breathe. I may give it 10 cents extra above the stop. I may give it 30 cents extra, maybe $1. It depends on the stock. If you're trading Tesla, you may need to give it $1 or $2. If you're trading some penny stock, you may need to give it 10 cents. If you're trading a low float, which let me give you a warning right now. If you're trading a low float, anything under 2 million shares and it's already rotated its float, meaning it's traded 2 million or more pre-market, don't trade it, especially if you're new, because you're not gonna be able to handle it. But if it's a low float like 8 million, 5 million, 10 million shares, and it hasn't rotated its shares, then it's okay. You trade it, but you need to give it some room. So every stock is different. You're probably wondering, well, what do I do? You can just pick a percentage if you'd like. You can say, you know what, I give it 5% room. That's where I'll get stopped out. That's how you need to be thinking about this strategy. And before we get into sharing my screen, make sure, a reminder, hit that like button because every like does help us grow the show. And we put a lot of effort into these videos. So let's get started. Let's get into the gap and crap strategy. Is my favorite one because it is the one that helped me get consistently profitable. It was the one I focused on because it was a feel thing. I liked it more than the long side when I first started. Everyone has their preference. For me, I really like shorting at the beginning and that helped me gain confidence. What I want you to see at the very beginning, we're going to review any, and then I'm going to show you an example of some trades of how I execute. The first thing I'm looking at is I'm looking at every spike and I need to see that every spike has failed. Look at that, it's failed, 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 failed. This one almost held and then the next day failed. And what do I know by fail? Look at these wicks. You see these wicks? If you don't know candlesticks, you need to start to learn them. On these wicks, you'll be able to see we actually opened down here at 192, spiked up to 340, and then failed and closed at 275. That is interest. And every time it's done that, we go here, it just fails. Look at that. So on this day, coupled with there's resistance up here, you see that resistance line. Look at that. We'll make that line a certain color. Then we'll go into intraday and you'll see this is what I'm looking for. Remember, the goal is I need something to gap up 50% or more. That's the first thing. The second thing is I need something to fail pre-market highs. That's the second thing. We just see that. Massive volume is always important, right? And then the third, which I know I didn't do it perfectly, but I will trade these and I'm gonna explain this. I wanted to spike up to high a day. That's where I want to be entering. However, look at this key area of resistance. If this spikes up like it was at the pre-market, spiking back up to pre-market highs, that's what I want to see. But we have resistance here on the daily. That's important. I'm not going to ignore that. That's coupled with the strategy, right? So that's important for me to see. And then we reject. When we reject, that's a good area of short interest. And then you can ride it back down. And the risk reward on these is very, very good. However, the risk is very high because if you're bad at cutting your losses, these stocks can rip higher than you think and you can really blow up an account really quickly. So you have to be very disciplined. And I've been always good at cutting losses quickly. I'm not worried about that. If you are any way worried about that, you do not want to do this. So just keep that in mind. And if a stock rotates its float, you definitely don't want to mess with it, especially as a beginner. I made videos on this in the past. Go check them out. But look at this. This is something that I really like to trade. It's something I've traded for years and it's my favorite setup. It doesn't always work though. There's sometimes when it's hot and there's sometimes when it's not. And there's sometimes where it only appears 3 times in the month. This is my favorite strategy. It is the one that helped me get consistent. So let me explain something. I'm going to share with you a couple of charts. First one is Jill. In this case, you'll see pre-market, we topped out and then we faded. And on that fade, I took a baby starter. Everyone takes their own size. I just took a starter, like a quarter size. And then when it popped at the open, because remember, at the open is what I want to see. And this thing did that. It popped right at the open, failed at high day. It did break through it above it just for a second. That's why I didn't short it right away, because I had a feeling, right? I had a feeling. Sometimes you'll get a feeling that this one looks like it's going to go, but it didn't. And so because it didn't, I started to hit it with my full size. And then I ended up covering at the end of the day. Let me show you another example on Kodak. It spiked over 50%. It failed pre-market at high day. You can see that clearly on the chart. And then at the open, we tried to spike, failed. I'm in short and I held it pretty much all the way to the lows. This one I didn't hold all day. And why? Because it hit my price target. And you might see like, why are you entering, it's not a high day. It tried to spike. You see it spiked to high day and failed. I'm getting in. That's why. But I'm still risking that high day area. So it's going to be wide. But in this case, it dropped all the way down to 750 and I'm in above 950. So it's already $2 a share minimum that I'm going to make. In worst case, I may lose $1 a share. Let's go ahead and get back to the video. But remember, like. Thank you so much. Now you have a better idea of how to implement this strategy, and I wish you the best of luck to pursue it. This is a strategy that really helped me get consistent, but it's not one that appears every single day, and you got to wait for the criteria. Because if you don't wait, I'm telling you right now, you're gonna take tons of losses and you need to just go ahead and throw your money out the window and burn it and put it on fire. But look, good luck, have fun, and follow the process.